Yo, what's going on, guys? This is your boy, Mac the Trader, and welcome back to another video. So, in this video, we are going to be breaking down the index market, S&P 500. Those of you guys who follow me on Instagram, I've been posting on my story that I've been trading the Nasdaq and the S&P as well, right? And for the past 2 weeks of trading these two index markets, we have not lost a trade. And so in today's video, I'm going to be breaking down those trades for you guys, showing you guys the before and afters, right? Now, before we get into it, of course, I have to show you guys like some of the screenshots and posts that I have. Unfortunately, the SPX, I missed taking a screenshot of this. However, we did have a Nasdaq trade that matched this exact trade right here, and that one I also posted on my Instagram. I posted this on my Instagram. Feel free to hop on my Instagram story if you guys want to see that. But this was the trade here for the Nasdaq. All right, we're gonna break that down in just a second. And then those of you who are not following me on Twitter, go ahead, follow me on Twitter, because whenever I'm trading the NASDAQ within the PM session, I'm always going to tweet about it, right? Especially on my close friends. If you are a student, a part of Mac Trading Academy, then make sure you guys follow me on Twitter and let me know, okay, that you're a student. And what I'm going to do is I'm going to add you to my Twitter circle, and that's when I will be sending out like charts and things like that for you guys to take advantage of the index market right along with me, right? So let's just move this over here. So as you guys can see, this tweet was tweeted at 1:18 p.m. 9/15/22, right? That is today, September 15th. And as you guys can see, I said Nasdaq wants to play. I say we tango with it. Sells, maybe. I need to see a shift in volume, meaning I need to see a shift from buy pressure to sell pressure, right? We're just going to leave it at that. I'm not going to really go into depth with that. That's not necessarily what I was looking for, but that's the easiest way to explain it. Just a shift in momentum, essentially. So as you guys can see, it's 132 here, and price tapped into the point of interest that we're going to go over. Well, this is the Nasdaq. It matches with the S&P as well. If you guys want to see me break down Nasdaq, just feel free to drop it in the comments down below, and I will go ahead and make a video breaking down this entire Nasdaq trade. But anyways, so we were looking for a possible entry here, and I was actually on the phone with a couple of students. We were on a group session explaining my entire entry for this. For those of you who want to know my exact strategy, I am releasing a course very soon for you guys to take advantage of, where it will break down my exact strategy. It'll be maybe like 5 videos, so it'll be very short, straightforward, to the point. And yeah, just stay tuned for that. And I may even do like a PDF as well. So as you guys can see here, right, price pushed to the downside, went ahead and set my entry. If you guys want to know why that is my entry area on the Nasdaq, like I said, just let me know in the comments down below. But today we'll be going over the S&P. So this is my first entry. However, this first entry was not filled. Unfortunately, price never came back to this area to tag me in. We came very close, but we didn't quite touch this area here. And once again, yeah, follow me on Instagram, because this was the post that I posted on Instagram. So we didn't get filled in on this entry, as you guys can see. However, we did get filled on this entry here, right? And then price moved to the downside, and this was my target right here within this area, right? If you guys were following me previously on Instagram, I also posted my target for yesterday's Nasdaq trade. Let me know if you guys want me to go over that, because I will if you all would like. And I always, set the targets with this emoji right here. So whenever I have an emoji somewhere that looks like this, it's going to be my target. All right. So that was NAS, right? But we're going to go over this SPX trade right here, right? As well as the one that took place today right here within this region. Okay. So let's first break down this trade here. Okay, we did take sell continuations within this area on the Nasdaq, okay, and on US 30. If you guys want to see that breakdown, just let me know. If you guys haven't watched the US 30 breakdown, feel free to go ahead and watch that. I think you guys will enjoy that video for sure. So on the SPX, we can see that essentially the equities market, stock market, opens up at 9:30 a.m. Eastern Standard Time, right? So I'm not always going to take a trade during the AM session. Sometimes I like to wait, and really I like to take advantage of the PM session. Now, we did today on September 15th, we did take advantage of the AM session, and we were able to catch a buy opportunity up into this region here. Let me actually show you guys that trade. Because I do have a screenshot of it. This trade right here, okay, we took a buy opportunity within this region up into buy side liquidity, right? We will go over that in just a second as well, but really I want to focus on these sell positions because those sell positions are essentially going in the direction of the higher time frame, right? I really don't want to, go over this counter trend trade, but feel free to follow me on Instagram in order to see this type of content if you guys like seeing this, right? And once again, this was my target, and as you guys can see, it was hit to the T. Perfect. And that's when I took off 95% volume, and I just left 5% running. So let's go ahead and break down this area right here. So during New York session AM, okay, we had a sweep of buy side liquidity within this region here, right? After that sweep, price starts to break down just a little bit. But once we have that sweep on the M15, right, I'm looking for price to possibly go lower and run on sell side liquidity simply because we just swept buy side liquidity. So now we know that we're going to possibly target the opposite liquidity pool, right? So once we had this sweep here, okay, based on the M15, that is when I was on the M5 time frame. Right, just waiting for the PM session to start and for me to be able to possibly look for an entry opportunity and then hop into the market, right? So this was our sweep of buy side liquidity during New York session, right here within this area. It took place at 11:10 a.m. However, when we are trading the PM session, right, we're going to take advantage of price after 1 p.m. Eastern Standard Time. Just make sure you guys have your chart set to UTC -4 for the time zone, right? As you guys can see, I am on the Eastern Coast and 11:55 p.m. matches 23:55, well 23:56 now, right? So once the PM session starts here, okay, I'm already looking for lower pricing. Now right here within this area, we do see that we have a decent point of interest. We can see that this point of interest not only swept buy side liquidity, let's actually make this a little larger. There we go. So we see that this point of interest not only swept buy side liquidity here, right, but we also had a nice break to the downside, okay, giving us a market structure shift here. Right now, if you are going based off of institutional trading concepts, okay, then you have a change of character here, right? Price taps into this region, and of course you can start to look for your entry schematics. However, I did not take this based off of institutional trading concepts. I instead used the new strategy here at Mac Trading Academy. Course is coming very, very soon. Mentorship students are going to have first access to that course, right? Link will be in the description. So here we can see we have an intermediate swing high. Right, this intermediate term swing high is also responsible for taking out liquidity to the downside. However, this area has not been mitigated just yet, right? Price trades back into this, and this is why we wait for the PM session to start, right, at 1 p.m. We wait for all of this funny business to take place, and then we take advantage of the market after 1 p.m. So here we can see that price gives us a little bit of liquidity before 1 p.m. 1 p.m. starts with this candle here. We have a run to the downside, creating a swing low, okay? Higher lows on each side. Price then runs to the upside, and we sweep liquidity here above this previous high, also tapping into our previous POI, right? That formed around, I would say, when this candle broke here, so around 11:20 a.m., sweeping liquidity at 11:10 a.m. Eastern Standard Time. After that takes place, so after we have this sweep of liquidity here, right, then we can see that price breaks to the downside, taking out this intermediate swing low here and whatever liquidity is resting within this region. Now, why is this an intermediate term swing low? It is just a regular swing low, but I like to look at it as an intermediate term swing low simply because we see that this balances out this region here, right? and the market then pushes back to the upside. All right, but that's going to all be within the course, no worries. All right, so we see that intermediate term swing low is broken here, or you can just say swing low. All right, and we leave a little bit of imbalance within the market, as we can see here. Right, so this is where I set my order. Okay, as soon as I saw this wick break here and this candlestick close, my order was set here. Stop is right above this region, and then of course we're going to target sell side liquidity since we have just finished running on buy side liquidity here. Right, very, very simple and very, very straightforward. Okay, now we're going to get into the second trade that took place. It does have a different concept as it relates to the entry model, but the concepts, it does have a different entry model, but the concepts are the exact same every single time. Now, the different entry models that form will be within the course, no worries. Okay, and there are only certain entry models that I use. Those of you who trade my institutional trading concepts right now, you guys know that there's one entry model that I use, and that is what I stick with. It's going to be the same thing with the index market, except the index market is not manipulated as much as the currency market. Therefore, it really follows these rules to a T, and you can have a really, really high win rate. All right. This is what I will be using to trade live moving forward, whether we trade the PM session or the AM session, it just all depends. So let's go ahead and move on into the next trade. All right, guys, so I hope you guys enjoyed part one of the S&P breakdown for this week, right? If you want to be in on my private session that is taking place this weekend, all you have to do is click on the Telegram link in the description, right? The Telegram link is going to take you to my bot, okay, Trillionaire Mac Trades bot. All you have to do is start the bot. You don't have to put in any information. You don't have to put in your credit card, nothing like that. Just start the bot, and then you will gain access to my team's call outs as well as whenever we go live, right? So click that link, and also stay tuned for part two. It should be uploaded pretty close to this video, so feel free to check to see if it has been. And if not, feel free to check out the previous video because it includes a US 30 breakdown and entry, right? And it also talks about what months we should be trading and things like that, right? So check out the last two videos if you would like to focus more so on US 30. And then if you guys want to, if you guys want a Nasdaq 100 breakdown of all the trades that I've taken this week, then feel free to let me know in the description, and I'll definitely cook that up for you guys. With that being said, I'll catch you guys on the next one, part two, where we will be breaking down the second trade on the S&P 500 of this week. Let's get it. Also, make sure you guys remember we can make money within the market no matter if the market is going up or down. So make sure you guys take advantage. This is a recession-proof skill set that you can apply to any financial market. I'll catch you guys in part two.